Hello, traders. Gary Wagner here, 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 22nd day of February, 2021, and this is the daily report for gold and silver. Before we go into our report today, I do want to acknowledge that although the pandemic has hit the entire globe itself, today it was reported that in the United States we have topped 500,000 deaths, 500,000 deaths. Our hearts go out to those affected. On today's show, we will look at gold, silver, and platinum. Platinum was the only precious metal to close lower, but we saw stellar performances in the other metals. Let's take a look at the price board and our charts. Unquestionably, gold had a stellar day, gaining about $30.40, breaking back above 1800, this basis most active April contract at 1807.80. But as you will see when we pull up our technical indicators, we still have some genuine concerns about the longevity in terms of where gold prices could rise. And the technicals that I'm referring to are really our three moving averages, because we had the death cross which occurred between the 200-day moving average and the 50-day moving average cross below it, forming a death cross. We could see the following action took gold down while it is above $1,800 per ounce at 1808. We believe that there is still very strong resistance for gold at approximately 1827 to 1830. Now, that is based upon a series of lows that came in. First of all, when we look in this area right here, as well as all throughout last month, we can see that acted as a support area. Once we broke through that support area, we had a slight move above it. It moved as high as the 200-day moving average, and that's when we saw the market fall dramatically. And that's why I'm pegging solid resistance right now at $1,830 in gold. However, even dollar weakness, which lost 0.3%, currently at 90.095, did not allow platinum the strength to close higher on the day. That, in fact, lost $11.40, currently at $1,281.70. That is right around the area that we entered our long position at. While it's unquestionable that platinum did lose ground on a day when all of the other precious metals gained, we are still in a bullish mode as far as our technical indicators are concerned. We still have pretty strong volume. And when we look at our three moving averages, we are in exact alignment that we want to see for a bullish scenario, which is having the short-term 50-day moving average on top, followed by the 100-day, and then followed by the 200-day moving average. However, there is one caveat that we do want to be careful about and definitely keep our eye on, and that is the strength of the trend. Because when we look at platinum through a Heikin-Ashi chart, Japanese average, we can see that as we had these real strong upticks, we had the absence of lower wicks, which is what you look for when you're in a bullish mode for the most part, except with the exception of this day here. And then we had one pivotal candle, but we moved back into green candles. They do have tails, but it does show that the trend itself is either weakening or consolidating. For right now, we will maintain our long position in platinum. In fact, it was silver futures and spot, as well as the electronically traded funds, SLV, that performed most eloquently today, with SLV gaining 4% on the day. We are looking at silver futures. They closed up 95 cents at 28.21 currently. That is a 3.51% gain. Contrast that to the iShares Silver Trust that gained $1 a share, which is a 4% gain, currently $26.27 per share. And spot is currently tracked at 28.12, up 89 cents on the day. That is a net change of 3.27%. As you know, our target is currently between $30 and $33 for silver. We are looking at a Heikin-Ashi or Japanese average chart we can absolutely see that we had a period of consolidation. You see that in a Heikin-Ashi chart when you get a series of green and red candles kind of alternating. That was really capped by the low that was seen on Friday when it traded to its 50-day moving average. But if you look at today's Heikin-Ashi candle, it has no lower wick and the body size is beginning to enlarge. And that, to me, coupled with the proper order of our moving averages, really tells me that we are still fully in a bullish mode in silver. And we can most certainly glean some important technical information when we look at silver through our candlestick chart. And the first thing is today's close. We talked about the fact that we had this tight band of consolidation, and you can see even though these are Japanese candlesticks, they are also alternating between green and red, indicating a period of consolidation. We had that low that came in on Friday, but today's close is impressive because the actual closing price is above all of the highs that came in during that period of consolidation, which puts our next level of resistance roughly between $29 and then about $29.50 as our initial target for this particular move in silver. Maintain your long SLV, maintain your long silver futures and Forex. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.